Pantheon AI presents Zero-Day Option Surge, U.S.-China Trade Tensions, Crypto Dips. Welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is June 2nd, 2025. Good morning, everyone. I hope you've had your coffee because we've got quite a bit to cover today. Let's dive right in.
Definitely. I'm ready to unpack all the latest. Host A, what's the market looking like to start?
Well, to kick things off with a quick look at the markets, the S&P 500 is trading at roughly 5,894.069, showing almost a negligible decline of about negative 0.044%.
Okay, so a pretty calm start for equities then?
Exactly. Moving over to the Dow Jones, it stands at approximately 42,033.75, down by almost negative 0.39%. Not too drastic, but still something to note. And the Nasdaq is at about 19,113.94, with a minor dip of negative 0.09%. On the small cap front, the Russell 2000 is around 2,062.426.
So equities are pretty much holding steady minor movements across the board. But I'm guessing crypto isn't quite as quiet, is it?
You know it. It's not just the equity markets we're watching today. Cryptocurrency is also making headlines. Bitcoin, that ever-volatile digital asset, is currently valued at about 104,482.351, experiencing a slightly sharper decline around negative 1.11%.
Whoa, that's a more noticeable drop for Bitcoin. What about Ethereum?
In contrast, Ethereum is actually seeing a bit of a lift, valued at roughly 2,551.20, up by nearly 0.48%.
Interesting contrast there, isn't it? So, a mixed bag for investors on this beautiful June morning. Traditional equities are stable, but crypto, especially Bitcoin, is seeing bigger fluctuations.
Absolutely. It really reminds us that while equity markets might move in measured steps, digital assets can often take a leap or stumble in ways that keep even the most seasoned investors on their toes.
Yeah, definitely keeps you on your toes. So what are the major market trends capturing attention lately?
One of the standout stories from the past month has been the surge in popularity of so-called zero-day options. In May, retail traders really stepped up their game by pouring a record share of trading volume into S&P 500-linked options contracts that are on the verge of expiration.
Zero-day options? That sounds intense. What exactly are those, and why are retail traders getting so into them?
It does sound intense, doesn't it? According to data from CBOE Global Markets, this isn't just a small uptick. It's a new milestone that underscores how retail interest in option strategies is evolving. While it's not for the faint of heart, it essentially gives traders a chance to capitalize on very short-term price movements. It's a fascinating development for those looking to diversify beyond conventional trading strategies.
Wow, so high risk, potentially high reward. That's definitely something to watch. What else is on your radar?
Switching lanes a bit, we see another important trend, the ongoing challenges facing U.S. manufacturers. Despite some recent relaxations in the trade restrictions from the Trump era, manufacturers are still feeling the pinch. They were among the first to weather the storm of tariffs and trade wars, and they continue to face significant headwinds.
That's a tough spot. I've heard many in the industry are asking, what happens in 90 days? It sounds like lingering uncertainty around global trade policies and shifting consumer demands is really making them brace for more volatility.
Exactly. It's a reminder that even when policies shift, the economic ripples can be felt long after the initial trade decisions have been made.
And speaking of trade discussions, I hear there's some big news coming from CNBC on that front.
You're right. President Trump and Chinese leader Xi are slated to speak later this week, although not today. The conversation is anticipated to be intense, particularly with Trump recently accusing China of violating an agreement that had lowered tariffs from 145% to 35% in May.
Wow, that's a big one. And didn't China also impose export restrictions on rare earth metals recently?
They did. In early April of 2025, China imposed export restrictions on 7 heavy rare earth metals and rare earth elements, further complicating the trade relationship. This development could have far-reaching consequences, not only for the geopolitical landscape, but also for global supply chains, especially in high-tech and manufacturing sectors.
That begs the question. How will these discussions shape the policies that govern our trade, and by extension, the costs and availability of critical components in our everyday tech products? It's a huge deal.
It really is. Now, shifting our focus to another intriguing story. SailGP, the dynamic sailing league known for its high-speed, high-adrenaline races, is making a significant move by launching a sports betting initiative in collaboration with industry heavyweights DraftKings and Bet365.
Sailing and betting? That's definitely new. I guess it shows how far sports betting is expanding beyond football and basketball. It's proof that the lines are blurring between entertainment and finance.
Right? And betting on high-speed boat races might offer a refreshing change from the usual wagers on touchdowns and home runs. Unless, of course, you find yourself more at home with a board than a boat.
Haha, good point. What's happening in the corporate realm today?
In the corporate realm, another major story is coming from James Hardie, which is planning a notes offering valued at approximately $1.7 billion to help fund its acquisition of AZEK.
Big move for James Hardie. This signals a significant reshaping in its capital structure and really underscores the company's aim to strengthen its market position through acquisition. Always interesting to observe how companies maneuver financially to grow and stay competitive.
Absolutely. For investors keeping an eye on the construction and manufacturing sectors, this is a clear indication that new dynamics might be emerging as major players consolidate their positions.
What about student loans? I know that's a topic that affects so many people.
We also have a notable piece on student loans. President Trump's proposed Big, Beautiful Bill could trigger 4 major changes for student loan borrowers. The Senate is set to consider this spending overhaul in the coming weeks.
That's huge for millions of students across the country who are juggling higher education and financial debt. It's a powerful reminder of how policy decisions at the federal level directly affect everyday Americans.
Couldn't agree more. Moving over to the realm of corporate acquisitions, Mediafly recently made headlines by enhancing its AI-driven revenue enablement suite with the acquisition of Appinium.
AI everywhere, right? This deal is intriguing because it consolidates what many regard as the #1 Salesforce native learning management system into Mediafly's already robust platform. So they're merging marketing, sales, service, and learning data into one cohesive environment?
Exactly. In today's increasingly digital business landscape, this kind of integration is becoming essential. Companies big and small are striving to harness the power of artificial intelligence to streamline operations and drive smarter decisions. This move by Mediafly not only cements its position as a leader, but also offers a glimpse into how technology can reimagine traditional corporate structures.
That's a great point. Now, taking a more personal turn, let's talk about money management. I've heard a lot of discussion recently about the biggest mistake many Americans in their 20s make with money.
Oh yes. According to a certified financial planner, while the specifics may vary from overspending to failing to save adequately for retirement, the bottom line remains clear. Planning for the future is crucial. So if you're in your 20s, pause for a moment and consider whether your money is truly working for you.
Yeah, it's so easy to overlook future planning when you're young. Are you setting aside enough for a rainy day? Or, more importantly, are you contributing to your future in a way that will pay dividends when you're older? It's a conversation that really highlights that even in one's youth, the seeds of future security are sown by the financial decisions made today.
That's a perfect segue to our next point. On a related note, CNBC Make It has rolled out a comprehensive online course titled A Step-by-Step Guide to Buying Your First Home Without Making Costly Mistakes.
That's invaluable. For many, buying a home is one of the biggest investments of their lives, and having a resource that demystifies the process is so important. Whether you're a first-time buyer or just looking for a refresher, this guide is a timely reminder of the importance of financial literacy.
It really ties back to our earlier discussion on making smart financial decisions from an early age, a consistent theme that seems to resonate throughout our morning briefing.
Definitely. So let's transition to a sector analysis that gives us a closer look at some of the industries driving these trends. What's happening in tech?
In technology, we're witnessing exciting innovations, particularly as companies integrate more sophisticated artificial intelligence and machine learning technologies into their operations. The acquisition by Mediafly, for instance, not only showcases the demand for integrated learning management systems, but also underscores the competitive edge that a unified data environment can provide in the fast-paced tech world.
So investors keeping an eye on tech stocks might want to monitor similar trends, as consolidation in this arena could hint at future growth opportunities. What about energy?
The energy sector, too, is undergoing significant transformation, spurred by a global emphasis on sustainability and alternative energy sources. Although we haven't seen headline-grabbing legislative moves recently, underlying shifts in how energy is produced and consumed remain a vital backdrop for market moves. Companies in the energy space, both traditional and renewable, are likely to face a period of rapid adjustment.
That means investors should weigh the risks and rewards carefully, especially when changes in regulation and technological advancements can quickly alter the competitive landscape. And in finance itself?
In the finance realm, the continued evolution of derivative trading and option strategies is of particular interest. The record surge in zero-day options trading volume is not just a flash in the pan. It signifies a growing appetite among retail traders for strategies that can yield high returns in a short period.
And that trend could lead to increased volatility in related market sectors, right? And potentially bring regulatory scrutiny in the near future.
Exactly. Keeping an eye on these developments will be critical for investors looking to navigate these more volatile waters with caution and an informed strategy.
It really feels like all these stories are interconnected, especially when you look at the broader global market implications.
They are. Trade discussions between the United States and China are an ever-present factor behind market fluctuations, and any significant shifts in these talks could rapidly influence global commodity prices, supply chains, and even investor sentiment across various markets.
For example, any further restrictions or negotiations on rare earth metals could have knock-on effects that range from electronics manufacturing to renewable energy projects worldwide. It's a complex web.
It truly is. Similarly, the global push towards integrated technology platforms, evident in acquisitions like Mediafly's, shows that business innovation and market consolidation are becoming increasingly important drivers of both corporate strategy and market performance.
So what are the experts saying about all this? Are these short-term fluctuations indicative of a longer-term trend or just daily volatility?
Many market analysts I've spoken with recently have been debating just that. The general consensus seems to be that while the traditional markets are on fairly calm waters at the moment, there's a storm brewing if global trade tensions escalate further or if there's a significant policy shift domestically.
And what about the crypto space? Bitcoin's drop versus Ethereum's uptick. Is that a subtle realignment in investor preferences?
That's a really interesting point. Is the market, in a way, signaling that investors are seeking safer, more utility-based digital assets rather than purely speculative ones? That's a question worth pondering as each day unfolds with its own set of surprises.
It really is. On a lighter note, it's moments like these that remind me of the old adage, even a broken clock is right twice a day.
Haha, right? Market fluctuations can sometimes seem like they're letting us know that even in chaos, there is an underlying pattern waiting to be deciphered. And speaking of patterns, have you ever noticed how the timing of market rallies often seems to coincide with those seemingly unrelated moments in everyday life? Like when you're just about to leave the house to catch your train?
Oh, definitely. It's almost as if the market enjoys giving us little puzzles to piece together between our morning commutes and office deadlines. It can be frustrating for day traders, but it also reminds us of the intricate tapestry that is the global market, where timing, strategy, and sometimes a bit of luck all play a crucial role.
Exactly. As we round out our discussion, let's quickly touch on some key takeaways from today's briefing. First and foremost, despite minor declines across major equity indexes, the market remains relatively stable, albeit with some cautionary signals coming from the cryptocurrency space.
Right. Mixed performance today. Traditional markets holding steady. Bitcoin facing downward pressure while Ethereum edges up. Shifting dynamics investors need to watch closely.
Then, there's the remarkable surge in zero-day options trading among retail investors, a trend that could reshape how strategies are executed on Wall Street. This is being closely tracked by both market analysts and regulators alike.
Definitely one to keep an eye on. Meanwhile, challenges remain for U.S. manufacturers despite easing tariffs. A reminder that policy changes have lingering effects, and that recovery often takes longer than anticipated.
And let's not forget that global dialogue, such as the upcoming conversation between President Trump and Chinese leader Xi, holds the potential for deep market implications, especially if trade agreements are renegotiated or altered.
From a sector perspective, technology continues to drive innovation. The energy sector remains in a state of transformation amid environmental targets, and finance sees an evolution in derivative strategies. each interlinked with the broader market ecosystem.
Moreover, individual financial decisions, from managing student loans under potential new legislation to navigating first-time home buying, are as significant as ever in shaping the financial landscape for millions across the country.
So what does all this mean for you, the investor or trader tuning in this morning? It might seem like we're dealing with a veritable smorgasbord of market factors, from high-stakes derivatives trading to major corporate acquisitions, each interconnected in ways that can either buoy your portfolio or require a recalibration of your strategy.
My advice? Stay informed, keep a diversified approach, and always be ready to ask questions. After all, these markets are as unpredictable as a cat on a hot tin roof, and in that unpredictability lies both risk and opportunity.
Great advice. It's a wild ride, but staying informed is key. Before we wrap up today's conversation, do you have any final thought-provoking questions for our listeners?
I do. In a market that's witnessing retail traders substantially shifting their strategies through zero-day options, have you re-examined your own approach to risk? With discussions between major global leaders hinting at possible trade reconfigurations, how might these developments ripple through your investment portfolio? And for those just beginning on the journey toward homeownership or grappling with student debt, what steps can you take today to better secure your financial future?
Excellent questions for everyone listening. These aren't just questions for the boardroom. They're questions for every one of us navigating the complex tapestry of modern finance.
I want to extend a heartfelt thank you to all of you for joining me this morning. Your engagement and curiosity are what make these discussions so enriching. Remember, my friends, Pantheon AI is here as your information co-pilot, guiding you through the sometimes turbulent but always fascinating world of finance.
We're here to help you navigate it all.
As we look toward the close of this episode, keep in mind that tomorrow is a new day filled with fresh data, news, and insights that we will unpack and discuss just like today. I encourage you to come back for the next episode and continue this journey of learning and discovery with us. And if you ever find yourself pondering the intricacies of market trends, or if you have questions, big or small, remember that you can always ask our AI co-pilot for further insights.
In conclusion, today's briefing has taken us from the quiet stability of major indices to the dynamic edges of options trading and global trade negotiations, all while reminding us of the importance of informed decision-making in a rapidly changing market environment.
So as you step into your day, take these insights and weigh them carefully. Set your strategies, plan your financial moves, and maintain that critical eye on the horizon of global events. And before I sign off, here's a little reminder that I hope will stick with you. Learning shouldn't feel like a full-time job. Thank you for tuning in to the PAI Morning Briefing. Stay curious, stay informed, and I look forward to our next conversation tomorrow. Have an excellent day ahead.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.